It's March 25th, 2025, and this is the Watson Weekly. Today we have a special episode where I'm interviewing the former CEO and Chief Innovation Officer of Commercetools. Yeah, I'm here with Dirk Hoerig, former CEO, Chief Innovation Officer, founder?
I take founder
all
mostly,
these things?
But Chief Innovation Officer, all these things sound good to me.
Yeah, no, that's awesome. So Commercetools obviously has been in the market for a while, had a very interesting origin story, not as a platform, as a services company that became a platform. So talk to me, remind, I guess, our listeners, who's Commercetools? Why do you exist?
Yeah, so Commercetools today is one of the leading platform providers for enterprise commerce technologies. When we started back now 15 years ago, actually the early 2000s, we had been running a services business that had been focused around Hybris, which later on became SAP company, where we had been highly involved, but we also worked with companies around, some people might not remember, but Intershop or Magento, that then became part of eBay and then part of Adobe. So back at these days, e-commerce, at least compared to today, looked fairly simple, I would say. Right? So we had a website. It was imitating Amazon.com's shopping behavior. E-commerce managers focused on search engine optimization, search engine advertising. But on the technology side, they had not been much that had to happen.
Right.
And why was it? It was just one sales channel. It was the desktop. And if some of your older listeners, I should say, remember, technology changed when the screens in the offices changed. So we got bigger displays every 3-4 years. And then, hey, what do we do to the e-com site? How can we maybe do an up-leveling on the experience, have a bigger product photo, and so on. And then suddenly, with the launch of the smartphone in 2007, cloud technologies, new business models, digital natives, and so on, things started to change. And brands and retailers needed to make changes to their technology to up-level the customer experience, to come up with new business ideas, to stay competitive almost on a daily basis. And this caused a lot of issues. And my most prominent example is years back, Best Buy wanted to move that to cart button, a few pixels to the right. And
seems like a simple thing.
Seems like a simple thing. And you might say, okay, a few hours, a few days, whatever, could not take long. And Best Buy is one of the top 10 US online retailers back then, and I think still today.
Right.
So guess what? It took them 9 months, involved almost 60 people full-time, cost them more than $1 million. And that's unfortunately the
Sitting
good
here
news.
today, it sounds unbelievable.
Yeah, but you would be surprised. Maybe that's an extreme side of things, but we find a lot of large enterprise retailers that still have that problem today, that they have a huge marketing backlog. This marketing backlog is helping them to increase top-line revenue, and they are not getting these things out.
So let's unpack a few things you just said. You started at a word which doesn't seem to have a standard definition of the industry. And I almost feel like the Princess Bride, Inigo Montoya. Like, you killed my brother. Like, that word means not what you think it means. And the word is large enterprise. There are some companies say this is $30 million. Some companies say this is $100 million. How do you define large enterprise?
Yeah, it depends on, good question, because what revenue do you mean? Do you mean the online revenue, or do you mean the total revenue, right? So, and businesses that are pure online and that have 200-300 million of revenue that way can already have large enterprise complexities. But if you're a 10 billion company and your online revenue is just 20 million, then actually your use case might be
very
closer
simple.
to an SMB kind of. So there's already the differentiation. We look at online revenues of 200 million and above, and the sweet spot is 500 million and above. But it's less about the revenue. We look at what are the requirements from the business?
Right.
Do you need to be that agile and fast? Do you need to up-level the customer experience constantly? Do you run into scalability challenges on a Black Friday or any other shopping event? So those kind of things.
So those ideal customers from your point of view are over 500 million a year and have complexity in their business and sort of high level constant demands of their innovation teams. And they have innovation teams. This is not necessarily someone who's starting a website out of their basement. These are serious companies with thousands of employees.
No, not really. On the employee side, and that's a good question, especially on the tech team side, you can get a lot of things done with a tech team lower than 20 people actually involved. And then you don't even need to have a big SI. It depends a little bit on your working model. If you're a Fortune 50 company, you're normally used to work with bigger teams, larger SIs, and so on. And we also feel very much at home there. But when I look at customer examples like Shields.com, also large US online retailer, they went live in less than 4 months on our platform with a very small team that had been involved on that. So we see it, I would say, both ends of the spectrum.
No, that's great. And when they're coming to you, you mentioned the Best Buy example about moving something 2 pixels to the right. I imagine that's not the most common use case of someone coming. I saw originally, one of the things, at least I noticed as an outside observer, and 4 or 5 years ago, was there's a lot of people coming over from ATG, and at least 10, 15 like very large customers, and ATG over any appreciable length of time, 10 plus years, which was a common installation period, devolves, or maybe it was always a custom system, but certainly it devolved into a custom system.
Yep.
And so, what solution did Commercetools offer them?
So here's the thing, right? So, and that maybe closes the Best Buy loop. The problem of Best Buy was not that they did not have the right talent or that they did not understand what to do and these kind of things. It took them so long to get this done because they made to a system that had not been designed to make changes on the runtime. And we need to differentiate between customization and implementation and then being agile on runtime. They made changes to the system for the last 10 years, and nobody knew anymore what to change where. They had 280 different versions of the product detail page, no testing environment, and so on. And here's the purpose why Commercetools exist and where we come from is we wanted to give the abilities to make changes quickly, not only during implementation, but especially during runtime, for brands and retailers to their commerce platform really quickly. So getting them from 1-2 updates a quarter to 1 to 2 updates a day, if that benefits their business. And on the other end, helping them scale, because the size of GMV in online is way different than it was in 2005.
Right.
Till it is today. And now we get back to the ATG topic, and it's not about ATG, but the legacy platforms out there that had been running most of enterprise commerce had all been developed in the late 90s, early 2000s. And they are all the same, no matter if you look into an ATG or an
WebSphere,
Hybris,
HCL,
and so on. They all literally started within the same year based on a JEE framework, which was great at that time because they solved a different problem. Now we are in a world where consumers are highly demanding, where everybody is impatient. So if it's not happening now, then I'm not waiting the next 5 minutes or even until tomorrow, where I expect blended experiences, where I'm interacting on multiple kind of touch points. So when my company is, as a brand or retailer, now we get back to the enterprise, is seeing challenges within that space, then Commercetools provides a solution for it. If I just need to sell something online and I have a pretty simple catalog and I'm just doing it in one country, then there are plenty of other great options out there that might be maybe easier to go for.
Got it. And so that kind of simple catalog, simple single country use case, would you say you shy away from it? Or is it just like your pricing and your implementation model is just in a different place so that those customers wouldn't come to you?
You definitely could do it. I think how the product is being set up and all the tooling around it, it would feel overwhelming for somebody who just wants to launch a simple website. We have things for this, but you also need to position onto your right customer. So if you're saying you're the platform for everybody, then you're maybe also the platform for nobody.
Correct. Yeah. No, that makes a lot of sense. wanted to talk about pricing for a second. Obviously, everyone's pricing is private and no one's going to reveal their pricing, but what is your pricing based on?
Yeah. So we're not charging on GMV. We have seen this model being challenged a lot over the last decade. Has its pros and cons. We are focused on something that's really transparent for the customers, that's forecastable for them, that is growth friendly, but that also helps them mitigate risk on their forecasting on it, and it's on an order based volume approach. So they basically look into, okay, what do we expect on the orders on that platform on transactions going through, and then we have a very small transaction fee as a take rate.
Got it. And is there like an enterprise software license underneath that?
No. There's no hidden fees. There's no hidden kind of platform fees. Yes, there are a couple of add-ons that you can take as well, so new products and so on that we launch. But the amazing thing about it is, and I actually don't know any product, and I'm really open to learn. So for the commenters of this podcast, please provide any kind of input. But we are versionless, which means customers on our platform that went live in 2014. So for example, La Carhartt, the fashion brand. They're on the same version like Shields, who went live just a couple of months back. We do updates multiple times a day, and we do that for all of our customers simultaneously, and they don't need to do anything to adapt. And when we look at some companies, up to 60-70% of their IT budget goes into maintenance and keeping the lights on and migrating from one version to another to stay within the support contract. You don't have any of that. So that's all included.
No, I think that makes a lot of sense, and I'm sure the predictability is the one thing that's, I mean, at the end of the day, a transaction is a transaction is a transaction. It doesn't cost you more if it's a $200 transaction, you personally, meaning Commercetools, versus a $5 transaction, and everyone knows what orders they're forecasting, or else they have probably bigger problems.
Yeah, and then the last years, we started partnerships with our friends at GCP and also at AWS, integrating our platform into their marketplace. And what this basically means is that they can use the cloud credits and commitments that they have with these providers, basically also to pay for the usage of the commerce platform. So it also makes it much easier from the budgeting standpoint.
Got it.
And even if they have, with their cloud budget, resources allocated somewhere else, they can use it for this.
Yeah, no, that makes sense. Let's talk about market entry for a second, because I followed the space for a long time, 20 plus years, and I can't tell you how many, literally I can't tell you, but I've also seen a lot of failures of people entering the North American market is like the Shangri-La of software markets, meaning that people think like, oh, I'll spend a couple $1 million and I'll enter the US market, and you end up with like $50K in ARR. And Commercetools seem to have a different approach to that I'm not sure is well understood. So I would love for you to unpack that to the extent you're able to. How did it start? First of all, why? Like, you started in Germany, my understanding. Why come to North America? Obviously, your investors probably were certainly interested in it, but then the approach to doing that, knowing all this, you guys have been in e-commerce for a long time, knowing the difficulty. Where did you start unpacking that?
Yeah, so it first started with the ambition. The ambition for Commercetools was that we wanted to create a globally leading platform, at least having the chance of becoming that, because we knew that the effort in launching a new commerce technology business is so risky. I've been so close with the people of Hybris, close friends of mine, worked with them on their business for over a decade. And we learned that if you're lucky, it takes you 10 years to build a successful business. And therefore we said, if we do this with Commercetools here and try to establish a new platform player in the industry, we don't want to be a niche product, right? So they are like every country, I call them the Magento derivatives, or it's another version of a Magento.
Right, right.
And they never. So there's a French version, there's a
Yeah,
German
they
version,
fork.
there's a UK version. It's kind
Yeah.
of all similar, but they never really scaled up. And we said the effort is just too high, and the risk is too big if we're not just hoping for large opportunities. So therefore, it was clear, if we want to make it, we need to make it in the most relevant market in the world, which was, and still today is the US. Some could argue about Asia Pacific as well. There's huge commerce market, but as a Western company, it was more natural to look into that direction. From a investor community, right? So this was 2015. As a German company, European VCs at that time always gave all of their founders a recommendation: win in your home turf first, then maybe go to your backyard, which would be surrounding countries, and then maybe 10 years later do the US, which is, from my perspective, if you're ambitious, the completely wrong advice. Because if somebody else goes into your biggest market before you, even if it's just 70% as good as your product, and they have a head start, it might be 2 times or 3 times more challenging and cost you much more if you come back in years later. And we said, okay, if we have to win there anyway, then we need to do it now. So that was the first thing. It was about the ambition. The part that was also helpful is that we had been in the industry for a decade, that we knew a lot of people over here. And it was also not an overnight success, right? So today, yes, half of our business is North America, half of our business is Europe. If you look just between those two, and in hindsight, had been a good success. When I recently looked back into the business plan for 2015 for our North American entry, and we had a best case scenario and a worst case scenario, and it did not come totally to the worst case, but it took us roughly about 1 year longer than we hoped it would take us. And even though we knew the market, we knew our channel partners, we knew the other platforms really well.
Which a lot of people don't, but they still try anyway.
Yeah. And so I would say we had a couple of advantages. We also had been able to build a great team initially out of our network of people that we worked before for roughly 10 years in the market, and that had been really helpful. But still, it took us a while, but being persistent about it and making US a priority. So that's maybe a third thing. We never saw us as a German company that is also doing US. We saw us as an European, maybe international company that takes America as the number one country. So we always say, okay, we're coming from Europe, but we're almost like an US first business and that kind of perspective.
Right, which is, I think that's part of the reason that a lot of people fail, because they think like, oh, we'll just add the bits in North America that might be the delta between what our German or European customers have. What did you find different about the North American market?
So first, the benefits had been that the customers, so the brands and retailers, are moving significantly faster, at least compared to some of the European companies out there. Also, the size and the scale is much bigger. It's a German retailer that is doing 100 million online often is already quite a complex business, because they need to navigate already through translations, multiple countries within Europe. So they're almost acting like an intercontinental global company.
Right.
We found here, for example, I remember that story. There was in Jersey a one-man or one business person company that did 120 million US dollar GMV by importing batteries for wheelchairs, and was doing that online. We said, okay, and this is almost impossible to imitate and find in Europe. So what is maybe 100 million in Europe is close to $1 billion over in the US. So much bigger customers, way more need for the flexibility and scalability that we provided. So therefore, it was also helpful then in the later years for us on scaling up the business. And at that time when we entered the market, there had been some differences, I would say, in our channel ecosystem, especially around the SIs that we are partnering closely with. So we are a partner-first company since day one. We are not doing the implementation. We're supporting our customers and our partners on the implementation with expert services, enablement, many other things. But we let our customers and our partners take care of the customization. And those things look different, similar between North America and Europe, and it had been the same names. In the US, they had been, at least in 2015 at our early days, much more tied to the ATGs and so on. So breaking these ties up and starting to getting involved there, doing co-selling and events. Took us a little bit more effort. So that was what we underestimated initially.
The partner side.
The partner ecosystem, because it was easy for us to scale it up within Europe. And it took us a little bit more time to convince them here, which is, in hindsight, obviously normal, right? So they have to make business, right? So you cannot come in and say, okay, cut your ties with, well, it's great that you're doing Salesforce and Oracle and all of these other platforms. Now take us in as well, build a practice. It's a chicken and egg situation that you need to resolve.
No, and I guess, how did the Muck Alliance fit in? Were they part of the market entry, or is it more of a scaling factor later?
It was a scaling factor later, and it's interesting because I'm not sure if I can say we're doing the interview here at Shop Talk.
Yeah, of course.
And the Muck Alliance had been invented at Shop Talk. Now you caught me. It was either 2018 or 19, but it was at this event here because we and few of our partners used the term muck as differentiating technology description on our booth. So we had a Commercetools booth that was had muck on it, which was for microservices, API first, cloud, and headless, just as a definition on how modern experience technologies should have been built. And after the show, a couple of the people from 4 or 5 companies had been sitting together and said, hey, shouldn't we, instead of all of us marketing that individually, should we not create an independent alliance that's not under our control? That was an important kind of part of it, that has its own board, that has its own leadership, it's an own independent nonprofit business that is oriented on bringing the most modern technology vendors in the experience space, but also the solution integrators and partners around that ecosystem together. And that then had been the kickoff. And it helped us on solving a scalability challenge, because I'm already using a lot of buzzwords here, and we're in an industry that's full of buzzwords. And every year we are inventing a new one, and it's if you're part of that, it's a bit annoying even if you're a main actor. But to a certain extent, you have to do that to try to differentiate from all of the others, because these terms are not protective. And I'm a little bit personally even annoyed by that. That if we just take cloud, right? So cloud and enterprise software for me is always something that is multi-tenant, single instance public cloud environment, means that everybody is getting the same updates at the same time, that you have up and down scale capabilities on the infrastructure. So that is for me the hardcore definition. When you look at the commerce platforms out there, right? So they call them Commerce Cloud.
Not to name any names, but there was one announced just in the last week.
Yeah, so these Commerce Cloud products, and then there's some letters before
big
on the company name, big companies. This is all single tenant hosting. We did this in 2003. Yes, there's now an AWS, so there's a or GCP or Azure. There's a hyperscaler below, but at the end there's some bare metal, a single tenant. Somebody needs to do the migrations. It's versioned. It will cost you a lot of money. You're not gaining these. So there hasn't much changed except the term and the goal of it. And I know there are a lot of people that either would like to be part of it because they think they could benefit from it. They don't like it that we're pulling it out that way, that are therefore, I don't know, sometimes even a little bit offended. But from my perspective, the real issue is that you can't just stick wings on a car and call it a plane. Right? So there are a little bit of definitions on it, and that's the issue that we're having.
Yeah,
a
the
bit
word cloud becomes not as
in
meaningful.
our industry, right? So, and therefore, this is how the market lines had been initiated, and I think it had been a good platform for many companies out there so far.
Right. No, that makes a lot of sense. I mean, I think the market has certainly evolved, and I think as Commercetools has become, I guess, more successful, there's obviously more employees in the company, both in North America and in Europe. You guys hired a new CEO. Can you talk a little bit about that?
Oh yeah, that's awesome, right? So I've been acting as
Andrew Burton.
Andrew Burton from Boston. Great track record in building and running both private and public companies, and that had been a long search, as you can imagine, because you want to find the right person with the right mindset that culturally fits in well. And mid of last year, we finally actually had been able to get him on board, and then started with a transition after me acting as CEO, let's say for the first 15 years. And now let's see if he's doing the next 15 years. So we will see how far we can
Andrew,
take it.
if you're in the audience, there's pressure already.
There is some, and I know he enjoys it and is doing a great job. And frankly, we're still just at the early days, I think, of Commercetools and the potential, given the size of the market and the opportunity out here. And it gives me a little bit the focus or the opportunity to focus a bit more on innovation, on our partner ecosystem, strategically, doing things like these here today, for example, and maybe a little bit less from time to time also on the operational side.
Yeah, and so two questions coming out of that. Number one is, it's not lost on me that your new CEO is based in North America and not in Europe. Was that a significant part of your criteria?
Yeah. It had to be somebody who is in North America, and it also had to be somebody who's ideally located on the East Coast, because with a global business that is half. Well, it's actually we also have an APAC business in ANZ that is also showing significant traction. But between North America and Europe, it's half on the revenue side. It was important for us that also the new CEO and I, so in that case, Andrew and I, can do a little bit of, I would say, divide and conquer when it comes on meetings and on travel, because it's getting hard at that scale and global presence to be at all events, at all partner dinners, at all customer meetings, at all meetups at the same time in 2 or 3 continents. And we also wanted to give the US even more focus with Jen here, our CMO. We also hired Eric, our Chief Customer Officer, who's also in Boston, who joined recently. Matt Toole, our COO, also Boston-based. So it's now Hayo is in Berlin as our CTO. Shiri, our new CPO, she's in London. So I think we have a good balance now between US and Europe. So almost half, maybe a little bit more weighting already towards the US, and I think that's a great signal to the market.
I mean, so 2 things you're leaving out of this story that I'm curious about on a personal level. One is, this is your baby, and how do you turn that over? Let's start there. And why now?
I think founders constantly need to evolve and be flexible within their responsibilities and the role if they want to build a big business. If you're always holding it to yourself and to constantly do micromanagement, some companies that might work, and there have been recently these terms founder mode and so on, where I think this can be right.
Seems to be everywhere now.
Yeah, and there, I think there's a lot of different interpretations of that. But if you want to scale a company globally, you need to find the best people for the specific job. And I think something that we did well over the last 15 years was constantly up-leveling the team, finding people that are within the specific job better than you could do it for yourself. And then you need to enable them and ideally trust them, let them run and support them when they need you, but not constantly try to manage everything. So that was a mindset that we had been growing the company with. I think this is helpful when you then start also having somebody taking over your role, because it's not that for the last 15 years I did the same kind of things, right? So the first days even, and I think if my team is listening now, they're pretty happy about it. Even the first days I had been coding, which I'm not doing anymore. I haven't coded, so now with AI a little bit because it's so much fun and so easy. But obviously there are a lot of things that I or other people in the company don't have to do anymore, because there's somebody else that can do it better. And with the scale of the business and the revenue that we are now having, right? So I think we communicated it publicly. We crossed 40 billion in GMV last year, with 30 billion or 32 billion, I think it was, in 23 of GMV. That is significant size, right? So, and with more than 900 million customers in our databases end users, which is literally every eighth person in the world if you take by the money. So it has significant business
scale.
impact and scale for a lot of large companies out there. So constantly leveling that up and finding the right balance in the team and what everybody should do, I think, is key to success.
Yeah. No, and then I think the second part of this is, you see a lot of times a founder, CEO, when they are ready to move on, they move to board of directors, and then in 3 to 5 years, they're off to the next thing because they want to found again. You didn't take that path. You went back into the business. Talk about that.
This is actually about what I said earlier. We are still early when it comes to the potential that the company has. Right? So I think we communicated also more than a year back that we crossed $100 million of ARR, then it was $150 million of ARR. When we look at the market opportunity just within our core product space, the commerce platform, this is roughly 3-4 billion. And most of that still runs on 25-year-old legacy tech that gives not the customers the flexibility, the agility, the scalability, security, and so on that they need. So when we just look from a replatforming perspective to the enterprise landscape, and we spoke about the enterprise customer definition earlier on, there is still a lot to come. Then, and this is just within our core platform focus. We started to launch new capabilities. Actually, we do that constantly, but bigger initiative had been InStore earlier this year, which is, I would say, to a certain extent, the same market, to another extent, a different market that we are tapping into with another huge potential. Now looking forward, there's so much that we can do where I said, okay, this at the moment, the best place how I can help the company to grow is on the one end on the innovation side, on the other end helping our customers, our partners, supporting Andrew and the team. And yes, I'm also serving on the board, but I don't look at this from an asset management perspective. I also want to help them to get the most out of it and try to be helpful to our partners and customers. And who knows what comes in 10 years, but I think I'm at the right spot for now.
Yeah, no, that sounds, I think that sounds right. You mentioned about new capabilities. One of the things that you announced in the last year was related to stores, your in-store product. Can you talk? You announced it at NRF, and I think a lot of people were a little bit surprised at how a mock approach could be applied to the store, given your legacy. What does it mean for you? What does the announcement mean for you?
So, let's start with the surprise point. When we actually built the tool or the whole platform in 2010, the goal was to create something that helps brands and retailers and manufacturers to solve their business challenges that they have today, but especially the ones that might come up tomorrow that they don't know about yet. That a lot of that is around either business model and or touch point, because more and more devices, use cases, and so on had been coming to the market. We're early on AR. Let's see what Meta is coming up on devices this year and so on. And then AI, you could argue is AI maybe even a channel,
Right.
Or is it something different, and how will it be adopted? So that said, it was always about enabling every touch point. You could now say accept InStore, but that was not accepted by us. So we did not exclude it. And the thing with InStore always has been that first, internet connection had been really bad. So connectivity in the store, to a certain extent, still is bad today, depending in what mall you are maybe in and how it's being constructed. But it got significantly better over the last 20 years. Then technologies got more flexible. Cloud helped into providing more scalability or giving them more scalability, flexibility, and also shortening the response time. Because the ideal scenario is not that you have from a GMV, the still today most relevant touch point completely disconnected to all other touch points of the customer journey. Because from a consumer perspective, so let's put the consumer in the middle, you don't want that. You don't want to, I had that scenario recently, I will not call the name, know the company well, really like them. They claim to be, it's not a Commercetools customer, unfortunately, yet. Hopefully at some time. They claim to be top-notch when it comes to digital. But my experience was something completely different. Yes, their website is kind of nice. I can buy these things. They have a great services program. It's a luggage company. They have a great warranty program. You can just come to the store and repair it. But none of that had been created. I have lots of orders with them online. I have a customer account. They have a tablet in the store. Still, I had to work with 4 different systems for my services claim and all of these kind of things. So now closing the loop here with what has changed, and we saw that evolution over the last few years, had been that customers of ours started to either build or extend their POS with Commercetools APIs. And so where you could say, yeah, it's product catalog, it's cards, orders, customers, and so on. 80% of the use cases from the capabilities we already covered, but there are some significant differences within the store. Store is also much heavier regulated in some countries out there. So there are a lot of things on fiscalization and so on that you need to consider if you go that way. Plus we have and still had or have and continue to invest in them, great partners on the POS side. But it had been these are side-by-side installations. Everybody has their own backend, so you have redundancy on the data, you have redundancy on the customer, need to have redundancy on the inventory. You need to sync all of these data in the background, and there's obviously either this leads to a lot of inconsistency, it leads to high cost because you need to pay 2 systems basically for almost the same kind of use case. Implementing new capabilities. We saw this in COVID, like using the stores as shipping facilities. So ship from store took so much time because especially the POS systems hadn't been designed to be as flexible as a commerce platform where it's all about the digital experiences.
If you kind of go back to a lot of these, call it legacy, whatever you want to call it, POS systems, it's a lot about the hardware. It's Micros, it's IBM, it's these folks that are venerable companies that have scaled to the nth degree, but then it's not really integrated with anything else, and the customer is left to, why don't you ask a simple question? Like, why don't you know more about me?
Yeah,
I'm a good customer of yours, but you've treated me like you've never seen me before.
Yeah. And this is because a lot of these systems had been tied to hardware. They come from a different age where e-commerce or even other digital channels, social media and so on, didn't exist. And we always saw Commercetools as a commerce operating system. And as we saw these customers adopting us in the POS on their own, where we already told them, well, you can use our APIs for it, but some of the use cases that you would
Yeah,
maybe like
we
to
don't
have, we are
cover.
not covering them. They did it anyway, and we saw a big success there. We wondered, is maybe now the time to finally modernize InStore and deliver the promise on. Now we get to the next buzzword, and this is ridiculous. Somebody needs to look it up when we first time spoke about omnichannel in our industry. At the end, it's multiple systems that are, depending on how much effort you put in, a little bit connected. But now we said, hey, is now the time that we could have one platform that's also so enabling all of the touch points, including the store. And now we get to the hardware topic because,
Of course, we needed a new buzzword for that: unified commerce.
yeah, true. This is now the term for it because omnichannel had not been delivered its promise, so therefore everybody now came up with unified, including us. But yeah, it's
Seems like it's a sore spot for you. All these extra buzzwords.
maybe it is, and I hear the critics here, and I would say I'm part actor, part victim, maybe on that path. But so the hardware actually is one of the biggest issues when it comes to modernizing the store, because lots of retailers, especially those that have more than hundreds of stores, it's probably the biggest investment. And when you now tell them that they need to buy complete new hardware in combination with maybe new in-store technologies that are empowering the store, this is getting to, so it's a no-go basically for them. And now look at the macro, right? So retailers, they need to be more cost efficient, right? They need to roll out things way faster than they did before to stay competitive. They still have to increase top line and revenue and need to be innovative for this, and all of that in combination. And when you now tell them, hey, to do all of that, you have to buy hardware for all of your stores, this will not work out for them. And how we build our platform is that you can use it with any hardware that you have. So some of the companies that you mentioned are good partners now of ours. You can integrate it in your existing environment. You can launch mobile checkout, for example, with any hardware. You're not tied to any specific device or version of it. And that makes it pretty cost efficient for these customers.
And how do these providers view your entry into the market? Do they say, look, these are new capabilities that we can take advantage because our business is really a hardware business and not a software business? Or are they viewing you as a frenemy type of feeling?
Maybe behind the scenes, it might be. I think for them, it's a great opportunity actually going forward, because the future of the store can't be that we have these broken customer experiences, or that, what would be the alternative? Everybody going the Apple way and investing tens of billions into own software, own hardware checkout devices. That also cannot be the future. But I think most consumers want to have these Apple Store experiences since already 10 years, right? So now giving it to them with a easy market entry option and also helping them unify all of the other touch points, I think is a good thing.
No, that makes sense. And one of the customers that you guys have talked about is JCar, which is an electronics retailer based in Australia and New Zealand. Talk to me about their story. Like, let's start there.
So for those that don't, so check out JCar online. It's maybe similar, a little bit smaller to a Best Buy, for example, in the US, electronic retail chain. Lots of stores, became a Commercetools customer more than a year back, actually. And the interesting part there was that they said, we don't want to do the e-commerce website and apps first. We actually want to launch InStore first as an option and roll out a couple of weeks later, because we're then already on the platform. It's not two installations on it. It's just then the use case that they built first. And it took them
store first.
Store first. And here is what also had been surprising to us internally because they had a rough timing, and at the end it had been less than 6 weeks until the first stores had been up and running. So amazing success. They launched then or relaunched basically on Commercetools their website a couple of weeks later. And we now have more customers that are in the rollout, even bigger ones. Screwfix, part of Kingfisher, largest DIY company chain in the UK, is in current rollout and should go live actually also within the next few weeks.
Got it. No, that's super interesting because I think if someone has existing hardware, can they put your software on it, or do they need new hardware at the same time?
No, you don't need new hardware at the same time. If you don't have a mobile checkout yet and no devices for it, then obviously you need some kind of tablet, smartphone from any manufacturer actually out there. The only thing that you need is hardware that's connected to the internet. We do the device management, printer management, all these kind of things.
It probably can't be the old IBM green screen, though.
That will be a little bit tougher from the experience, but maybe it could work there as well. But we did not have that use case yet.
It won't be your first implementation.
It wouldn't be the first, right? So we're looking for customers first in North America, in UK, some other countries, while we're adding the regulatory requirements and fiscalization requirements for some countries that are not yet implemented, that are coming out over the course of the year. And mostly in the brand and retailer space.
Do you think the fact that people can use their existing hardware, is that a key differentiator for you, or is that kind of more of an accident of the way you're implementing?
It's actually, no, it's not an accident. It was by purpose implemented that way because the whole implementation had been done with a team that has 20, 30 years background in the retail space and has seen on the POS side all of these limitations and challenges. And we are a platform provider, right? So also we don't tell you on what smartphone you have to shop, right? So or in what we're integrated into Audis, into Porsche, into BMW cars, and so on. So our platform runs in multiple devices already today. We are not limiting it to something specifically. And therefore, it was just natural that we said, hey, we want to be the operating system below the hardware that's enabling all of these capabilities that also, and it's not just about, we spoke about the POS, which is a checkout experience, right? So it's about providing tooling for the store associates that they can actually act much more like e-commerce managers do on a digital side, where it's about personalization, understanding the customer, giving them knowledgeable information about the customers that are buying at hand, being able to provide personalized recommendations and so on. I think that's a great benefit. And a hardware-less part, so that you don't need to invest there, is a benefit on top that takes concerns off the CFO's table because, luckily I don't even need to make that investment, but I get all of the benefits of, for example, easily launching BOPIS, right? So buy online, pick up in store, or return in store, having inventory transparency.
Yeah.
And so it's something that sounds ridiculous, but how often do we go somewhere and then let's take shoes. They are not available in a specific size. And then maybe they need to call in another store and so on, instead of seeing this in real time. And ideally, they give you, the customer, the experience that you can see real time where is what inventory available. Right. And I make a reservation already within that store and then go over there. And yes, with a lot of money. So you could argue some customers already implemented this use case. Yes, it took them a lot of money and effort to run integrations on multiple backend systems that are all just enabling the customer experience, but they are doing it channel by channel, and we can do it with one platform across all channels.
Got it. And so, as a European provider that is a global company that's North America first, it's not lost on me that your first in-store customers are not in North America. When will we see our first North American customer, or even if you can't answer that, what types of retailers do you think are the best
Summer
fits?
is the first short answer on that. In summer, you will see the first over here. And it's brands and retailers that have the feeling that they need to provide a more modern checkout experience. If they have long waiting aisles in the store just for people checking out, that's probably one of the best signals
Right.
to do something here, because you lose a lot of revenue out of that. If you see that the cost on maintaining the in-store systems are too high, that's another good indicator. If you receive customer requests that said, hey, we would like some capabilities from you, like easily pick up in store or return in store. If your support is getting inventory questions frequently, I think these are all
Yeah.
flagging
So those
signals.
were all kind of, I would say, commerce capabilities. Earlier in the conversation, you mentioned about the complexity angle,
Yep.
where, especially in the North American market, compared to Europe, where you have to be essentially a global company from day one, the US, people can avoid that. Simple catalog, simple websites, maybe not the best fit. Does that apply to the in-store product as well?
Not really, because when it comes to the in-store experience, once you have more than it's hard to make a threshold. I would say once you have more than 20 stores, managing that across all of the stores becomes complex, because the downside, as one example, could be that you say you're good with overstocking, but ideally what you do is you see all of your stock, no matter if it's in the logistics centers, warehouses, and also in the stores, make them available simultaneously, maybe with different delivery times connected to it, depending on how your fulfillment business looks like, to the consumer. Because at the end, what you don't want to have is a lot of inventory on stock that's not going to sell. And you might have the wrong inventory in the wrong stores. And you could have a fairly simple product catalog. So like fashion is way simpler than electronics, DIY, medical products, and so on. So if we just use that as an example, the complexity of the product catalog could be low by just having maybe 1,000 SKUs or 5,000 SKUs.
Right.
But once you have that distributed across,
It's that number of stores makes a big difference.
I
It
think the
sounds
number
like.
of stores makes a big difference. The competitive environment can make a big difference, because if you have a lot of strong competitors that are challengers within their market, think about it. Let's pick customer or companies out there that are not Commercetools customers. When in the glasses industries, company like Warby Parker appeared. They put lots of pressure on product models, on pricing, but also the digital experiences. And once these kind of things happen, you can say, oh, yeah, but I have a simple business. Well, if your competitors are constantly outdriving you on innovation and are growing faster than you are, then your business is probably going into more and more challenges if you're not able to adapt quickly and constantly to that. So therefore, just focused on, hey, my catalog is simple and I'm just operating in the US is also not the only criteria here.
Right. No, I think that makes sense. And it strikes me that the North American market is evolving as we kind of step back from stores a little bit and talk a little bit about the broader market, particularly in North America, since it's the most important market from a growth point of view. Look, I don't know anything about anything. I always say this. I'm just one person with an opinion. And to me, there are two narratives in the North American market in the past 5 years. One is the Shopify narrative, and one is the mock headless narrative, pioneered obviously by Commercetools. How have you seen the market evolve in the last couple of years? And where do you see Commercetools fitting in as like putting your stake in the ground, like 5, 10, 20 years from now, this is what we think the market is going to do?
Yeah. I will also share my personal opinion here, right? First, it is great to have a strong and focused competitor like Shopify out there. And I really mean it like I say it. I really like Toby. I think they are doing a great job. I think, hopefully, at least behind the scenes, I think they are saying the same. And even if we are competing and fighting on a day-to-day business, I think this is how it should be.
Right.
In a market and an environment like that, that is so big and where there's so much to gain for the customers, for the partners, but also for us. And 4 years back already, where the market looked much different, at least from there had been more logos, there had been much more noise around it. The problem at that time is you had a lot of companies out there, but they had little differentiation. And actually most of them had really low traction and it was just covered by...
You mean on like the brand side, the D2C retailers?
It was the problem was a little bit maybe the venture capital market of the years
too much money.
2021, too much money, which is not the fault of these businesses, but the problem is that from just when you look at the market, no matter if you're an analyst or if you are a retailer or if you want to invest, it's hard to understand who's doing well, who's not doing well, what makes sense, what does not make sense, just because of the noise. And filtering the signal out of it had been becoming hard. But already at that time, some people out there, some analysts, I think, shared the same view that I had, was that over the time, it most likely is Shopify and us who are defining the market, but coming from different ends and with, in some areas, a different focus. And our focus here is, and Shopify obviously can talk about theirs, our focus is to provide the most flexible, scalable, efficient platform and products for enterprise, brands, retailers, manufacturers that need to innovate quickly, that need to launch new capabilities fast, that want to enable all touch points, that need a future-proof solution. And we're also focusing with our channel partners on doing this in a really fast and efficient way, right? So I spoke about JCar going live in 6 weeks. We spoke about Shields, where it had been a few months. And yeah, there are obviously also big replatformings on multi-billion-dollar retailers where then need a few months more, but the focus is really on making it as fast and efficient for them that they have a future-proof business. And it's now looking forward, and I think this, and there's often I get asked the question, hey, why is it? And what I strongly believe is that founding team-led companies have still more often, I'm not sure if it's ambition, and I'm not don't want to sound unfair. I know everybody is fighting hard for their customers and so on out there, but maybe it's easier if you are founder-led to make bold decisions and go for them because you risk less than you might do as if you are a small part of a large organization, right? So if your commerce platform is just one of 100 products in a big business, I think it's harder to go for markets and try to gain ownership than you could do before. And that always had been an advantage of ours. I think that had been an advantage of Shopify. And many of these other companies, unfortunately, had been sold, or fortunately to us.
Right.
And now looking forward, and maybe closing it with that, looking into the next 10 years. 15 years back, the pivotal moment in the industry for us to appear had been the problems or solutions that came up around multi-devices, so the launch of the iPhone and new technologies like cloud that allowed it to build a platform like ours to solve the new challenges that brands and retailers are going to have. We are now at another pivotal moment, maybe even bigger, almost like the internet around AI, that will have additional impact on how people shop, how they experience product, on how they interact with each other. And I think we are perfectly prepared for that area, because this gets back to our heritage here. An AI to interact with products from a brand or a retailer, it needs a fast-performing API. It needs easy access to a product catalog. It needs to be able to easily create a cart, to do an order without scraping a website and trying to understand that information. So luckily for us, I think we have the right foundation.
You have that base from the beginning.
We have the foundation from the beginning. Could say unintentionally, but we take that benefit and can now innovate on top of it, where we're doing a lot of development research with the large hyperscalers, so our partners around that, and are looking forward to the next steps, things that come there.
And I think all of us in the audience are certainly looking forward to your next steps. Certainly, we thank you, Dirk, for spending time today, almost an hour, in the conversation, and look forward to continuing to follow the company.
Thank you so much, Rick.
All right, I appreciate it. Hi, I'm Rick Watson, CEO and founder of RMW Commerce Consulting and host of the Watson Weekly podcast, your essential e-commerce digest. Our production partner for the series is Podcast on the Fly. This podcast is produced by RMW Commerce. To hear new episodes of the show every Monday morning, subscribe now at rmwcommerce.com/Watson Weekly and wherever you get your podcasts.